NIL money hits different until the IRS hits back.
If you thought the compliance office at your school was scary, wait until you miss a tax deadline. The IRS doesn't slide into your DMs, they send certified letters.
The kind that need a signature, 2 forms of ID, and maybe a therapist.
Today's episode is for every athlete who's ever been paid in cash, clothes, or clout and thought none of it counted.
Newsflash, if it had value, the IRS wants a piece. They don't care about your vertical, they want their cut.
And when the IRS pulls up, your followers will not save you.
Welcome to the AAA Ball and Play podcast, where we talk NIL, life, and the stuff they never teach you at orientation.
All right, before anybody tunes out thinking this episode is just about taxes, stop right there. This might actually save you money or keep you out of trouble.
Yes, because NIL is amazing until that deposit hits your account. And suddenly, you're not a student athlete anymore, you're a business.
If you're new here, I'm Wendilee Walpole Lassiter, go by Lee, attorney, certified tax nerd, and the one person in the room who actually gets excited about IRS code sections.
She's not lying. I've seen her read the IRS publications like it's a romance novel.
Don't judge me. There's plot twist. And joining me as always is my co-host, partner, and resident realist, and resident realist, Michael Agwara.
That makes a lot more sense.
Current sports agent, former strength coach, and voice of reason when I start quoting tax law.
Well, somebody's got to keep the podcast from turning into a continued legal education course.
Which honestly, it might be today. NIL changed the game, and now the IRS is stepping onto the court. The minute you start getting paid for your name, image, or likeness, you're officially self-employed.
And the IRS doesn't care if your bio still says student athlete. They see you as self-employed, the same category as Uber drivers, influencers, and freelancers. So basically, you're the CEO of You Incorporated.
Exactly, and CEOs have paperwork.
And quarterly payments. And a folder full of receipts they can't find when it's time to file.
NIL didn't just change how athletes make money. It changed how the government looks at athletes. The IRS is catching up fast. They've updated their 1099 reporting rules and clarified in IRS Publication 525 that NIL payments count as taxable income.
And trust me, they're watching. Venmo, PayPal, Cash App, all send reports for business payments over $600. There's no more hiding behind, I didn't know.
Exactly. And when the IRS audits, they're not asking you for your highlight reel. They're asking you for your receipts.
And if your answer is, my mom might have them, you're already losing.
So today we're breaking down the NIL tax game. What's taxable, what's deductible, what's dangerous, and how to stay audit-proof.
Because NIL money feels like freedom, but only if you treat it right. If not, it feels like a payment plan with interest.
And just so y'all know, before we start, every IRS publication we mentioned today is linked on our website. I created a page. It's ballandplaysportsagency.com/tax resources. That's where your NIL tax toolbox is.
All right, people, first money line of the day. If you can't explain it to your accountant, you probably shouldn't post it on your feed.
And that's the energy we're going to keep all episode long. So grab a notebook or your 1099s and let's get into it. But remember, even though I'm a tax attorney, this podcast is for educational purposes only. It is not legal advice, and no attorney-client relationship has been formed by watching this podcast. All right, let's start at the top. NIL payments are taxable income, period. It doesn't matter if you're 18, a freshman, or working off scholarship hours. The IRS considers any compensation, money, merchandise, travel, or even crypto as income under IRS Publication 525, which covers taxable and non-taxable income.
So if they send you a free pair of kicks, a duffel bag, and a thanks for the post, that's income?
Yes, exactly. That's fair market value, and the brand is required to issue a 1099 NEC if the total value is $600 or more in a tax year. That goes straight to you, and it goes straight to the IRS.
Man, I know a few athletes who just heard that and probably felt chest pain.
Well, here's the thing. It's not about fear. It's about awareness. NIL deals make you an independent contractor right now, not an employee. That may change, and if it does, we'll update y'all. But right now, NIL deals, you're an independent contractor. That means no one's withholding your taxes. You're responsible for the full amount, federal and possibly state too.
So you are your own payroll department.
Yep. And if you're self-employed under NIL, your tax responsibilities will come from another IRS publication here, IRS Publication 334, which is the tax guide for small business. It covers estimated payments, business deductions, and record keeping. And this is where NIL athletes fall into.
Money line number 2, Venmo is not invisible money. The IRS can, in fact, see it.
Yes. Any payment apps, actually, PayPal or Zelle accounts used for NIL deals are subject to Form 1099-K reporting if you receive over $600. So even if it's peer-to-peer payments, it's visible.
And taxable.
100%. NIL turned college athletes into entrepreneurs, but entrepreneurs have to file taxes.
All right. Talk to me about 1099s. I keep hearing that word from every brand under the sun.
When you get paid as an NIL athlete, most brands will issue you a Form 1099-NEC. That means non-employment compensation. It reports what they paid you for endorsements, appearances, or digital content.
So basically, it's the government's version of a group chat where your brand tattles on you?
Well, yeah, I guess pretty much that form goes to the IRS automatically. Which means if you don't report it on your return, and so your return and the brand's report don't match, you're going to get flagged.
So what about an LLC? Is it worth it?
I think, and I think most attorneys and tax people agree with me, that for most NIL athletes, forming a single member LLC can be smart, especially if you're earning from multiple deals. It lets you keep things organized and deduct legitimate expenses. But, and this is important, an LLC doesn't magically erase taxes. It just changes how you report them.
So it's not a cheat code.
I don't think there's really any cheat codes for the IRS, but it's a structure, not shelter. And if you're making over $400 in self-employment income, you're required to file a tax return under that IRS Pub 334. You also may owe self-employment tax, which is 15.3% for Social Security and Medicare. And just to differentiate here for a second, you have to, if you make over $400, you have to file a tax return. Companies have to pay you $600. That's their threshold for sending you the 1099 form. So just because it's $600 for a company to send you a form doesn't mean you have to make $600 to file. It's $400 for you to file a tax return.
Let's rewind it back. Did I hear you say 15%?
Yep, 15.3% for Social Security and Medicare. If you're a normal employee somewhere, your company pulls out, pays Social Security and Medicare. They match what comes out of your check. So if you're self-employed, you have to pay the part that normally comes out of your check plus what a company would have paid for you. You're the company and the person. So that's where the 15.3% comes from.
Is that before or after federal income tax?
That's before federal income tax. Welcome to adulthood.
And most of these high school and college athletes think their biggest problem is conditioning drills.
Well, they need to condition their finances instead. Y'all need to save every receipt, track your income, and file quarterly if you're earning consistently or you're going to have penalties. All of that is covered in IRS Publication 505, which talks about tax withholding and estimated tax.
So you're saying keep records, pay quarterly, and don't play with the IRS.
Yes, exactly. And again, all of this is broken down and all these forms are listed at ballandplaysportsagency.com/tax resources. That's links to these publications, NIL specific deduction list, and templates for tracking income.
Because if you can track your stats, you can track your receipts.
Yes, you can.
All right. Let's run through the highlight reel of NIL tax mistakes.
Mistake number 1, not saving money for taxes. You need to immediately stash away To be conservative, 25 to 30% of every payment you get.
Think of it like benching cash for the IRS.
Mistake number 2, not tracking your expenses. If you can't prove a deduction, it doesn't exist. Keep records for gear, travel, phone bills, and marketing, all of which can be deductible under that Publication 535, which covers business expenses.
No receipts, no proof. The IRS does not accept, my coach saw it.
Nope. No. Mistake number 3 is not filing at all. The IRS doesn't forget. Even if you only made $1,000, that's still taxable self-employment income. Late filing penalties start at 5% per month. And if you ignore it, you'll owe interest too. Basically,
Ghosting the IRS does not work. They don't get distracted. They get documentation.
Yes, they do. Let's see here. Mistake number 4, mixing personal and NIL money. Separate your accounts, one for business, one for personal. When you commingle funds, you confuse the audit trail.
And the last one, putting deals in someone else's name. Don't make your mom your LLC owner just to dodge taxes. That's not a hustle. That is a felony. Money line number 3, it's not finesse, it's fraud.
Exactly.
Fraud charges don't look good on a scouting report.
Neither do penalties. Because remember, if you file late, you're going to be hit with up to a 5% late fee per month until you pay. And after 60 days, there's a minimum penalty, and then interest keeps compounding.
So even if you own a little, file on time. The penalty for filing late is worse than the penalty for paying late.
Yes. Okay, now for solutions. Let's clean up the chaos a little bit.
Step 1, find a qualified tax professional. I can think of one. Someone who understands athletes, entertainment, income, or NIL. They'll make sure you're filing the right forms and getting the right deductions.
Yes, me. I love this stuff. I love taxes. So let's see. Step 2, set up systems. Use accounting tools or simple spreadsheets. Keep PDFs of every deal, screenshots of payments, and photos of receipts. The IRS accepts digital records. That's in Publication 538. Or 583. Whoops, that's in Publication 583.
Step 3, educate yourself. Like we said in segment number 3, you can literally download free IRS resources at our site. ballandplaysportsagency.com/tax resources, where we've linked to every publication we've mentioned today.
Yes. Okay. So then step 4. Step 4 is don't wait until April. Plan your taxes quarterly. NIL athletes who are earning consistently need to file estimated payments 4 times a year. And if you need to make enough a number of years in a row, you'll actually be penalized if you don't make those quarterly tax payments. That's all in Publication 505.
And step number 5, remember, taxes are not punishment, they're preparation. When you get your house in order now, you set yourself up for post-college financial success.
Exactly. NIL isn't just about money, it's about maturity. I realize most of you might think that today was heavy. I thought it was fun, but normal people probably think it was heavy, but it was necessary. NIL has created million-dollar moments and million-dollar mistakes. But now you know how to stay on the right side of the IRS.
Because ignorance is not an exemption.
Now, that absolutely should have been the money line for this episode. Probably no one else will love that line, but I do. Nothing. You have nothing to say. Okay. No. Which brings me to this week's downloadables. As we said, all of those tax forms and templates are under what was it? Tax resources. ballandplaysportsagency.com/tax resources.
I believe so. Yes.
Then we also have under the downloadables, and I'll put them under the tax resources as well, the NIL Tax Survival Guide and the Receipt Routine Tracker. And then, like I said, plus all the IRS publication links.
And next week, we are switching gears from taxes to trusts. As in, you should, and should not trust in your NIL circle.
Well, that one's going to get fun.
It always does.
Don't forget to check out the latest Chalk Talk Book Club and the Fast Break of the Day that is posted every weekday morning at 9 a.m. Eastern Time on YouTube, Instagram, TikTok, Threads, etc.
And daily at noon on Spotify, Apple Podcast, and more.
This has been a AAA Ball and Play podcast. I'm Wendilee Walpole Lassiter, attorney, athlete advocate, and defender of the deductible.
And I'm Michael Agwara, sports agent, realist, and man hoping this episode continues as continuing education.
See you next week, and remember, the IRS don't play. I can't say that sentence. The IRS doesn't play.
Why didn't you just say doesn't?
Because the title is the IRS don't play. And remember, the IRS don't play. You're listening to the AAA Ball and Play podcast. Quick note, this is for education and entertainment. Nothing here is legal, tax, or financial advice, and nothing we say creates an athlete-agent relationship. Listening or contacting us does not make us your lawyers or your agents. For advice, talk to a qualified professional in your state.